My friends, we are live with yet another installment of John's Econ Streams. Thank you for joining us. Per usual, we're going to hang out for a few seconds, wait for some people to show up. I'm going to do some administrative stuff like, make sure I'm streaming in all three locations. Twitter is good. Let's see here. Facebook is good. And YouTube is good. Sick. All right. Good to see everybody on this fine Wednesday night. I am super stoked to talk about quite a few things, but primarily are we seeing a market reversal? I think it's the main thing everybody's concerned about. I think it's the main thing everybody wants to know about, especially, if you're investing in the market and stuff like that. So we're going to check to see crypto market, how that's looking, stock market, how that's looking. We're going to touch on some of the commodities that we were talking about during last stream. And we're going to touch on a couple things about the Russia situation as well, because I've gotten probably 4 or 5 people now send me this article about Russia backing the rubles in gold, which is a super significant move. Don't get me wrong. But, everybody's saying like alarmist stuff like, oh, like this is the economic version of a nuclear bomb and this is going to debase global currencies and blah, 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 blah. And look, I mean, the gold standard's cool. I like the idea of backing fiat in something. Doesn't even need to be gold. Could be silver. Could be Bitcoin. I don't care. Just the idea of backing your monetary base with something that's actually tangible and scarce. I appreciate that idea. So there's a lot of good parts to doing that, but that doesn't mean that like Russia just trump carded the entire global economy. So we'll clear that up momentarily. The first thing that I want to show everybody is Bitcoin's illiquid supply shock ratio. So what is illiquid supply, John? Here, can I zoom in on that more? Oh, gorgeous. Look at that. Let me get rid of this outline so it's centered. I'm getting so good at the streaming thing. So what illiquid supply means is these are dormant Bitcoin, right? They're Bitcoin that has been taken off of the exchange and is kept in a cold storage wallet. The idea is that if your Bitcoin's on an exchange, you're probably looking to sell it, trade it, do something with it, right? But if you have more Bitcoin off the exchanges than on the exchanges, that probably means you're just holding it, right? And by doing that, you're taking Bitcoin out of supply, right? And how do prices move? It's all supply and demand. If there's less supply, but demand remains constant, price would be expected to appreciate. If there's less supply and demand increases, then you're going to see even faster acceleration of this price appreciation. So taking a look at this chart, this is showing the number of illiquid Bitcoins as a ratio of liquid Bitcoins on the supply of about 19 million. I think we're going to mine our 19th million Bitcoin sometime in the next week, actually. 2 million left to mine. That will probably take until 2040 to happen. Anywho. Also, really quick before I get into this chart a little bit more, if you have questions, comments, anything of the like, you know the drill. Go ahead and post them up. I will answer them as they come through most of the time. So yeah, it makes this whole shebang way easier and way more entertaining when I have, a little bit of a feedback system. Now, I'm totally okay with listening to the sound of my own voice for an hour and just, mentally riffing for that entire time. But these tend to be a lot more fun when other people participate. So just going to encourage that for a brief moment. Anywho, so looking at this illiquid supply shock ratio, and by the way, credit Will Clemente on Twitter for this chart. He's an amazing analyst. He just turned 20 years old today, and this kid has like 1 million followers on Twitter for his Bitcoin analysis. It's amazing. Hello, Adam. How you doing, bud? Hopefully well. But anyways, so this supply shock ratio is hit an all-time high by a huge margin, actually. The highest that it was previously was right before the May 2021 dump. We're coming up on a year since that happened, which is totally crazy. I mean, we're 6 weeks away from it being a year since, the great grand capitulation of May 2021. Um, Obviously, you saw a bunch of supply move on into exchanges, making them liquid, right? So you see that massive drop. And since then, it's been nothing but in an uptrend. Even with this, bear market that hit recently, it continues to remain in an uptrend, which is different. It's divergent from what we saw in the May crash, right? In the May crash, the liquid supply decreased like absolutely substantially. In this November crash, we're seeing no such thing. So John, if that's the case and illiquid supply is at a new all-time high, why isn't Bitcoin at a new all-time high? That's a great question. The primary reason why is because, again, this is supply mechanics we're looking at. Demand is important. Demand hasn't been there. We're going to go ahead and take a look at the Bitcoin chart. I am going to shrink my face so you can see it better. So if you look at the volume profile, which is this set of bars down here, I'm going to just there we go. I'll shrink Bitcoin's price as much as possible just so there's some open space there. And I'm going to decrease RSI so that we can just get a nice picture on the volume profile. I mean, look at the volume over here compared to the volume since then, right? Since basically, this short squeeze we had that sent us into this bull market. It's been nothing, right? So even though Bitcoin is this at its scarcest liquid supply of all time by a massive margin, we're not at all-time highs because demand hasn't shown up yet. Now it's increased a little bit, but only marginally. And I would say that nobody gets too excited over marginal changes. We're looking for substantial changes. So once volume starts kind of doing something like this again, and the demand shows back up, and the market participants show back up, and the retail buyers and the retail investors show back up, what you could expect is a massive appreciation in price. Now, this isn't, this isn't happening tomorrow, but the mechanics are there, and we've talked about this a couple times that. Yes, we did put in a new all-time high in October, November of 2021, but we have been in a bear market since May 2021. Well, John, that doesn't make any sense. How could we put in a new all-time high just a few months ago, but we've been in a bear market for a year, according to you? That doesn't sound like that should make sense. And the reason why is because of a sentiment perspective, because of a volume perspective, and because of major moving average perspective, which we will take a look at right now on my macro chart. We're going to add these moving averages in. Okay. So when this bear market happened, we actually held the 50-week moving average as support, came back up, held the 20-week moving average as support, and then went on another leg up. And generally speaking, right, you hold the 20-week moving average as support, you're going to have a pretty bullish few weeks, probably few months, right? And that's what we had. In the second or third week of September, we came down and tested as support, and by the middle of November, we were at a new all-time high. So great, awesome, sweet. But volume, I mean, it's so obvious when you look at the weekly chart, even like volume's just been in nothing but a downtrend. Sentiment's been brutal, right? Like retail buyers have not shown up. I don't think anybody's like overtly bullish, even when we were over here, right? Even when we were over here, there were plenty of people that were bearish. There were plenty of, and I'd say most of the people that were around for this all-time high were people that have been around since this area. No new market participants came in. When we had this run up, right? This massive move up. This is a lot of new buyers coming into the market for the first time. Over here, not so much, right? I mean, what's an all-time high if it's like $3,000 more than the previous all-time high? I mean, like just about 13% higher than the previous. Wait, no, I got that wrong. 5% higher than the previous all-time high. I wouldn't call that a super substantial top. I'd consider this top a lot more substantial. And the other thing is these moving averages. Right? We held the 50 week as support in this bear market. In this bear market, we're under the 50 week, right? And we were pretty far under it for a while. Okay. So what I'm getting at here is that we've been in a bear market for close to a year. And it's just been a really nice bear market. Like it's been pretty kind to the buyers in this market because I can tell you what, if I'm going to sit for a year in a bear market that looks like this, right, where, top to bottom, we're measuring about a 56% drawdown and then putting in an all-time high and then just coming down like another 50-ish percent, right? I'll take that over this, where it was just brutal, relentless downtrend for a year straight. And just when you thought you were bottoming out over here, you got another 52% correction. I mean, lower 55% correction, right? I mean, I'm pretty sure the top to bottom, this is 80% from the all-time high. Yeah, 85% correction, right? I'd rather sit through a 50% correction, an all-time high, and then another 50% correction any day of the week over a year-long. Like, you can't even do anything with this. I mean, you could buy, I guess, right? You could just consistently buy, and that's awesome. But, like, can't really do a whole lot, especially as a trader, especially just, like, from a sentiment perspective. Like, and the other thing here, too, is, like, especially since, like, we didn't go and retest these prior lows. No, I mean, don't get me wrong. We totally could, right? We could do something like this. This could be what you call a dead cat bounce, where, and we're gonna get a little bit more into that as we go on here. But we're looking pretty bullish for a lot of reasons. We're back above this 50-week moving average. We're back above this 20-week moving average. We're about to have a cross of the 20-week simple moving average, the 21-week exponential moving average. Weekly RSI is looking in a lot better shape. I'd like to see it break this downtrend here and start moving up again, hopefully. But all in all, this could still be a dead cat bounce, right? Like this could just be a failed rally and it might fail to make it up here. And then we just, come back down and do something like that. Like that, there's no reason why that's out of the question, right? But we're seeing some positive signs for the first time in like 3.5 months. So just worth noting. Also, since I've been talking for 12 minutes straight now, usual plug, every single stream, I'm drinking a orange vanilla polar seltzer, sparkling water, no calories, good for you. Tastes delicious. Sponsor me. But I think we're seeing a lot of really positive signs in the market. And I'm going to talk about those positive signs. And I don't want you guys to think that this is me saying like it's bull run time and we're destined for 100K. I'd like to think that, right? I mean, my wallet would really enjoy it if we, went to this 100K region. But I think that is equally as possible as the fact that we head back down, So let's make the bullish case here. I'm going to switch to our daily chart. There we go. So big thing is, I'm going to get rid of my moving averages. We broke this 46K level. And I've been saying for a long time that we cannot get bullish again until we break that level, because we tried to get up and we failed and we went back down, and then we tried to get up again and we failed and we went back down, and now we finally broke above it. It looks like we're about to retest it as support. So anybody that's kind of been, following the content here, right? This is resistance. When you break above resistance, it turns into support, assuming a successful retest of support, and then you can head up, right? If it fails here, then it's just, okay, we're back and chopping sideways probably. Or, people might get really frustrated and maybe they start selling when they previously didn't think to. But right now, everything's looking positive. We're above that 46K level, which we broke beneath in January, right? I mean, shit, I think we've been in here for 80 days, 85 days, right? It's a pretty long time. So what you'd like to see is it come down and head up, right? I have a tweet from the minute that we broke out of here where I said, ideally, you're looking for it to come back down to 46K. It can wick below, right? That's fine. It can totally go below temporarily. You just don't want to see daily closes back beneath this level. You'd like to see it hold the support and then move up. That's what everybody's looking for. But it's also important to know, right? Everybody's looking for it. So, self-fulfilling prophecy or whatever the inverse of that might be, you want to be cautious. After 46K, right? I think like the next logical spot is like 50K. And if we break that, I think all the people that have been sounding bearish for the past 6 months are gonna start to flip their narrative a little bit, and then hopefully we'll start heading in that direction again. Totally possible, totally plausible. And look, I just want to like this is I'm gonna admit defeat for a second here, but that's totally fine. I have traded this entire range pretty well, but I got chopped to bits in this range here, right? I made some sells in this area and I re-entered them in this area and I was pretty happy with that. I re-entered the rest down here. But then after that, like I don't know what I was doing, right? I thought I became very convinced that we were going to visit the 100-week moving average, which is currently at $34,000. And back when I was saying this, it was actually at $31,000 about 60 days ago now. So I was thinking, okay, it makes sense that we just come back down to this line here, and we never did, right? And so even though I locked in some good buys, I had some sells in some areas expecting for us to go lower, and I didn't get that lower price that I wanted. I mean, I guess we could come back down to it, but right now I'm not totally assuming that. But the lesson that I want to instill in all of you about that is I had invalidation for my trade. That invalidation was we get above 46K, we're probably, not going back down to $30,000. That was my invalidation. And the reason why I'm preaching this right now is because of the fact that if I got stubborn and I decided to not cut, the loss that I had for that or whatever, because I at the end of the day, I came out of all of this chop, even though it was a bunch of frustrating trading and I was getting a decent amount of stuff wrong, I still came out like break even for the most part. But at the end of the day, I could have been stubborn and decided not to, deal with my invalidation and not cut my losses and not manage my risk. And then I could potentially be erasing and reversing all of the successful trades that I made in this area. Right. And that's what I want to get at is no matter how good of a trader you are and how many times you get it right, you're only one trade away from being wrong and then being stubborn about that trade to erase all your progress. Right. And I don't know about you guys, but I work pretty hard at this stuff and watch these charts pretty obsessively. So it'd be really annoying if, a month of bad trading ruined the other 11 months of good trading. So if you are trading, which has all sorts of risks to it and not something that I recommend for everybody by any stretch of the imagination, but if you are trading, make sure you have invalidation set. Make sure you have stop losses set. Like you want to know how to manage your risk properly. Anywho, back to the bullish cases here. So the other thing that I want to mention with this structure is that we are consistently printing higher lows, right? Every time we went lower, it wasn't as low as last time. Goodness. Bullish. Looks great. You get, kind of like a wedge pattern if you right? Something like that, breaking out to the upside right now. Like that's exactly what you want to see from a structure standpoint. It was something that I saw way too late when it came to trading it, which is totally okay. Um, so the structure looks bullish. We're above, this resistance level that we failed to get above quite a few times. We are back above the 50-week and 20-week moving average, right? We're above all of these very significant long-term moving averages. Bullish, 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 bullish. Looks great. Why might we be bearish now? First of all, is the geopolitical situation has yet to get any better whatsoever. So, that's fun. And then on top of it, we do have a couple more milestones that I'm concerned about us crossing. Going back to the daily, open up this moving average. So 200-week moving average, gotten rejected twice each day, which is totally fine, right? Like I don't think it's a very significant moving average. Getting above it on your first pass is not necessarily easy. So, we might get rejected short term, come back down, test 46K as support, and then break through it with strength. Totally plausible. But it's kind of like a final boss, right? We're above literally every other major moving average except the 200 day moving average. I think I said 200 week by accident at one point. Sorry. 200 day moving average. So we need to get above that. That's super important. The other thing, if I switch back to weekly here, get rid of the moving average, the log bands that I hold very near and dear to my investing strategy, we are getting rejected off the literal like tippy top of that log band. Okay, so log bands, 200-day moving average, both of those look like a rejection. Short term, right? Again, you can come back down. Honestly, ideally, I would love to just hang out here for weeks. Totally okay with that. Gives me time to accumulate, gives us time to build out, I think, very critical support. And then we can start heading up. And if we just chill, right, in like, 46K to say like 51K or something like that for like 2 months, when we break out of that, that's when I'm going to say like outright 100% we are bullish. We're probably going to head towards a new all-time high, right? That's the type of thing that I would like to see us get above this log. Well, us chill for a while, then get above that log band, get above the 200-day moving average, and then just the rest is history from there. I just also want to take a moment and look at the other times that we've been rejected off of these log bands. So first, right, we have this one here. I mean, it's beautiful the way that these things pan out. Like rejection, rejection, rejection. Oops. Rejection, rejection. That's 1, 2, 3, 4, 5, 6 weeks that we tried to get above this particular log band and failed. And then when we came up to this new all-time high, we actually got rejected twice at the log band beneath it. What that means, in my opinion, is that we just weren't ready to cross into what I think is going to be like where we hit rejection when we hit this cycle top, get to the new all-time high, and probably head into a pretty severe bear market after that. And I want to touch on 4-year cycle theory in a second here because I know Adam had a question about that. But and I've used these log bands before to show this, but there we go. We're never going to get to some of these higher log bands ever again, right? We have this red one here. If we get that to that log band right now, it's $900,000 Bitcoin. And these are continuing to increase, right? Back when we hit it the first time, it was $1,200. Now it's just going to keep going. And we're never going to hit it, right? In 2017, the top came near this yellow log band. That yellow log band is now at $420,000. I don't think we're getting to $420,000 anytime soon. So what's worth taking a look at then is, okay, we dropped 2 log bands from the 2013 to the 2017 cycle top. So if we dropped another 2 log bands, that would make this green guy here our primary candidate. That's at $196,000. Honestly, I'm not even sure if we're going to get there. So I'm going to drop it 1 or 2 lower. So that's us dropping 4 log bands from the last 2017 cycle top. And that log band's currently at $115,000. So I think our range right now, and again, these are increasing functions each week. This is going to keep increasing something to the tune of this, right? So right now, the area that I think we'll end up in is $115,000 to $150,000. Somewhere in there, I think, is where we're going to be topping out whenever that happens. Could happen 2 months from now, could happen 2 years from now. I'm not entirely sure. All I'm saying is that that's the area where I personally am going to be taking profits, right? It just feels like, that seems like the nice like fireworks that everybody wanted, and then, time to cool off for a foreseeable amount of time. Um, and again, like we have a lot of hurdles to get past until we're even at the point where we can have that conversation. We have to get above this log band, this log band, this log band, and this log band. And then not only that, we have this previous all-time high as resistance. We have a bunch of other major resistance. We have the moving averages that we already talked about. So a lot to be wary of. But also, let's say we trek towards these log bands, and I'm going to do my best to just kind of fit some lines to these functions here. I'm going to fit them a little bit more conservatively, so I'm not giving you guys price estimates that are higher than reality. That looks good. We'll roll with that one. And then we're going to roll with that. That looks good. So if we take until, let's say, the end of the year to get here, this range becomes 141,000 to 186,000, or end of the year to get to this range is what I meant to say. If it takes us until mid 2023, that range becomes 188,000 to 200,000, somewhere in like that general area, right? So actually, the longer it takes for us to get to these upper log bands, the better, right? It gives us more room to go higher, like, and that's the thing is like the same thing with like this accumulation range that everybody seems super frustrated with. And I get it because we've been, between $30,000 and $65,000 for a year now. I'd probably be pretty annoyed too. But the thing is this is building out such critical support that when we do finally break out, whenever that might be, we're gonna have so much support here and so much confidence to move up, right? Like that's what you're looking for. All right, I'm gonna move some questions here. And then I'm going to talk about cycle theory because, again, I know that Adam had a question about that. Greg says, thanks, John. DeFi, though high risk, seems to be a place to make significant money in crypto lately. Stoic 400K on clients getting here 40K last we spoke. Yeah, you just want to be careful. So with DeFi especially, I mean, let me see if I can pull this up here. So like this Wonderland, Magic Internet money, all of this stuff pertaining to it, like you could earn like, I don't know, something ridiculous, like 90,000% APR for a time. But then people were taking out crypto loans to stake crypto on crypto that they already had leverage in. And anyways, like dudes got liquidated, like liquidated. They lost tons and tons of money because they had all of their stuff just locked up in garbage DeFi projects that are Ponzi schemes with extra steps. So when you talk about making, 40K a month on 400K staked, right? I mean, that's what 10% yield per month, right? I'd be stoked on 10% yield per year. And look, I don't know the mechanics of Popsicle, so I don't want to claim that they're a Ponzi scheme with extra steps, but you got to be careful with that stuff, 100%. Especially if you're messing around with leverage. And I'm net on Bitcoin, Ethereum, Ripple. Applecoin, it's an algo-ran platform to buy, sell. Nice. Um, quickly, I'm gonna get to 4-year cycle theory here. So, and some of you guys might be varying levels of familiarity with this, but this very popular um, theory is that Bitcoin operates on 4-year cycles, and those 4-year cycles are influenced by the halvings, which halving is something for Bitcoin that reduces the amount of reward that miners get to mine Bitcoin, right? So it inherently forces a supply shock into the price action of Bitcoin, right? Now, the very first halving was in 2012. I wish I had November 28th. So November 28th, 2012. All right, so there's halving one. Then your next one was July 9th, 2016. I'll get it right there. There's halving two. And then you had May 11th, 2020, which is, I can't count dates. Sorry. There. Okay. What do you notice after each of these? From this halving, massive increase. From this halving, massive increase. From this halving, which took place right after the March 2020 capitulation, massive increase. So everybody has this idea that every 4 years when a halving occurs, we're just going to get a massive bull run. Back when Bitcoin was a little baby asset that only had a market cap of a couple, $1 billion rather than nearly $1 trillion, totally makes sense, right? You cut the reward that people are getting paid in half, essentially reducing the supply that's flowing into the market by half. It does not take a whole lot to push price up. And I think the same can be even said for 2017. But I think miners now only account for like 5% of revenues. And don't quote me on this number because I could be butchering it and I apologize if I am. But 5% of that number that makes up the entire market cap of the asset that is Bitcoin. Personally, I don't think that's enough to really move the market that much. So I think these 4-year halving cycles are probably a thing of the past. Not that there's still going to be halvings every 4 years, but I think those triggering these massive bull runs is, probably some hopium. The other thing too that nobody seems to consider, and I'm borrowing from an analyst named Ben Cowan here, who I've mentioned a few times while I do these streams. He's definitely been a wonderful resource for some of the research that I do. He mentions over and over and over again, lengthening cycles, diminishing returns. And they're just theories, right? But the diminishing returns part is real as could be, right? And I've explained this before. It's because it takes more and more money every time to get the same return on investment, right? Back when Bitcoin was a $1 billion market cap asset, it only took $1 billion to double the price of Bitcoin and earning you 100% return on your investment. $1 billion in Bitcoin now is a drop in the bucket. It would earn you about a 1% return on your investment because the market cap's about $1 trillion. To get the same return on investment that you got back when Bitcoin's market cap was $1 billion, you now need $1 trillion, right? I mean, it's like it's doubling, right? So 2 plus, that's a time symbol, John. 2 plus 2 equals 4. Now let's double that. You get 8. And you need to, right? What are you noticing here? You need to get bigger and bigger and bigger numbers to do the exact same increase of 100%. So naturally with that, you're going to get diminishing returns, right? And that makes perfect sense. The other thing that we're going to talk about is lengthening cycles, right? Which you're already kind of seeing this because it took longer for 2017 to top out than it did in 2013. And right now, I don't think we're done with the cycle. Now, don't get me wrong. If this truly was the all-time high and we just, head back down from here, like, yeah, that was the end of the cycle. lengthening cycles aren't a thing. But I don't think that's the case, right? I think we're going to bounce around in here for however long we need to take, and then we're going to push up to the upside, and there's going to be fireworks and a nice, beautiful all-time high and massive increase in the assets, price, and then we're going to come back down to reality. But that's going to take months from now. So, we've already lengthened, right? This cycle top to cycle top over here was 211 bars. Over here, cycle top to this most recent top was 204. So if that isn't the actual top of the cycle, which is absolutely plausible, we've already lengthened. So now we just need to put in a new all-time high to confirm that we have diminishing returns and lengthening cycles. And that means that next time that we do this, it's going to take even longer. Might take 6 years, might take 7 years. You're not totally sure. But I digress. So it's going to take longer and longer, and for that reason, I don't think 4-year cycle theory is accurate. And I think that if you're investing based off of 4-year cycle theory, you've probably done yourself more harm than good in this range, because maybe you thought this was the top, maybe you thought this was the top, maybe thought because this wasn't the top that we're about to go into a bear market that's going to last 2-3 years, right? But in actuality, I don't think Bitcoin is signaling any of that to any of us right now. I don't think that's really the case. So worth noting. Also, for those watching, feel free to ask me to analyze any other charts for crypto, for stocks, for whatever. Happy to take a look at any asset that you potentially have in mind. Now, I want to mention, because we've been literally staring at Bitcoin this entire time, just, a few other things. Ethereum looks great right now. It looks very strong. It actually looks a lot like this fractal over here. We're actually going to do bars pattern. We're going to take this guy, and we're going to do something like that. Check this out. I mean, like, nothing's a one-to-one match here, but if you lengthen this to account for the fact that it takes longer and longer due to the return on investment, I mean, this looks pretty dang similar if you ask me. So that could mean that, again, we just chill here for like 3-4 weeks and then we start heading up. I would love if the market just relaxed for a second, right? But you don't always get what you want, right? But my preference would be that nothing just starts going crazy, right? I'd prefer that we just build out support, just hang out for a while, work our way up. Better yet, right? If we really like, what our technical analysis patterns that make us so cool. What if we did something like that, right? Just worked our way up. And then maybe we had a small correction, and then we went sky high. And for those that aren't familiar with what I'm referring to right now, like the bullish pattern, the holy grail of long-term bullish patterns. I talked about this with gold last time we did a stream. Like, I'm not trying to take anything to the bank as far as like technical analysis patterns go. But like, if you have a multi-month period where you have a nice rounding bottom, we love our rounding bottoms, and then a correction, and then head up from there, like, look out, right? Gold just did this over the course of a decade. I take go to the month chart for gold, zoom out. I mean, it's textbook, right? And I don't own gold, but like, if I was a gold investor, I'd be losing it right now. Look at this. This is a decade long rounding bottom. Beautiful bull flag there, right? Bouncing around, breaking to the upside. So to me, it's mean that gold's going to do something like this for a while, right? something like this, right? You got to account for all the corrections that I totally know when they're going to happen. Um, so just, ideally, like that's the pattern that I would love for Bitcoin to take on. We don't always get what we want. We might just blast off. This might be a dead cat bounce, and we might head back down to the bottom of the range or lower. But like ideally, looks like that. And then you get a correction, and then you break out to the upside. That's what we're looking for. Um, I guess where do you think the Nasdaq's going? So for those that don't know, right, the Nasdaq is mostly tech stocks. Well, it's pretty much all tech stocks. And because of that, you get a lot of volatility because people get excited about tech, and then sometimes they don't realize that they're investing in bad tech. And then, sometimes that turns into something that looks like this. Oh, that's so ugly. Gotta love to see that though. Like, I mean, that's brutal. I'm s- I I'm happy that I got into investing during not the biggest bubble in American history, arguably since like the Great Depression. Anyways, so what's cool about Nasdaq is shorter time frame. Yeah, we put in a lower low, right? We had this low, and then we went lower than that. But these major lows here, we haven't crossed beneath them yet. And in fact, it looks like we just held it as support. Hooray! Um, right, you see that support line based off of this low. And we held it, right? Every time we wicked down to it, we held it, and then we've since exploded to the upside. That's what you like to see. Let's take a look at some key moving averages for the NASDAQ too, because I think that will help kind of paint the narrative that we're looking at. Beautiful, right? Held the 100-week moving average as support on top of the fact that we held the slow as support. Big. We love that. Got above the 50-week moving average. Big. We love that. But then we're seeing a little bit of resistance at the 20-week here. And the 20-week is your like bull market band, right? Like you want to be above that. That's how you're for sure bullish. And right now we're in the process of getting rejected by it. Now, short term, right? Don't take that to the bank. Take it with a grain of salt. But we had this run up, but I mean, it's the same thing as Bitcoin getting rejected at the 200-day, right? Like we could do this and then consolidate for a bit and then move up. That's totally plausible, right? But right now, like we need to be above that 20 week, and that is currently sitting at, for those that want to know, about $15,000. So Nasdaq gets above that and hangs out for like several weeks above $15,000. Look out, right? And the other thing too is like people are comparing this run up to the dot-com bubble, and I get it, right? Like this is, I mean, this is a bull run, baby. Like that's pretty killer asset appreciation. I mean, we've basically more or less been in a bull market since the 2008 bottom. So I get why people are nervous, but the trajectory at which we're increasing is not the same as the dot-com bubble. It's actually not even close to the same as the dot-com bubble. And the other thing that I think everybody's failing to account for when they say that this is like dangerous and we're about to have a bubble pop and we're about to go down to, $5,000 NASDAQ or $10,000 NASDAQ or whatever. Which, by the way, like, I mean, $10,000 NASDAQ is prices that we saw like 2 years ago. Would it really be the end of the world if we went back down there? But when it comes to that, people are forgetting that this is what our money supply looks like right now. I'll get rid of these silly looking moving averages with it, right? Like, and just for reference, like, you go to the dot-com bubble, right, early 2000s, John. There you go. Like, this is what the money supply is doing then, right? Like, from, 1995 to, let's say, 2008. We'll go to 2008 because that's when, the market like crashed hella badly. And that's how many years? 5 plus 8, 13. This will work out perfectly. I like how I'm doing this. We had a 116% increase in the money supply over a 13-year period. Okay? 116% increase in the money supply over a 13-year period. Now let's do another 13 years from 2008 to now, basically. Almost twice that. And what's even more gawking to me, right? What is even more concerning is 50% of that has happened in the past like 2 years, right? Like, so when we talk about like, oh, this is going to be like this is going to go huge bear market and we're never going to recover from this. Like, guys, we went through a global pandemic and right now we're at the first European war between like a major superpower in like 100 years. And all of that's already priced into the market and the drawdowns been marginal, right? 20% drawdown. And just so that we know, when the dot-com bubble popped, it's an 83% drawdown. An 83% drawdown now would look like, oh, didn't even give myself enough space on the chart to draw it. Nice. I'm botching this. Sorry, guys. An 83% drawdown would be like $2,700 NASDAQ. I don't know, man. Now, don't get me wrong. Like, I think one day we will be due for a long-term bear market. I don't think that's out of the question whatsoever. And honestly, we'll probably be healthy because printing the amount of money that we've printed isn't healthy. Doing all of the other crazy stuff that we've done with our markets in the past, essentially since the financial crisis, is not healthy. But like, I look at this and I don't see a blow off top necessarily. It doesn't. And that's the thing, is when we go into a long-term bear market, like, it's going to end in the craziest fireworks that I think anybody's ever seen. Like, it just makes sense to me. Or it's like, if we're going to talk about a decade-long bear market, because that's what we endured with this, right? I mean, we did not break out of the dot-com bubble all-time high until 2015. Imagine buying the top of this in 2000 and having to wait 15 years to be back in profit. Man, everybody's complaining about a year-long Bitcoin bear market. Imagine 15, right? Like, for something of that magnitude to happen, where we're in a bear market for a decade or whatever, right? This better be a blow off top. But I just, like, does this look like a blow off top compared to this, right? I think this just looks like asset prices rising with time and an increasing monetary base. Like, and what a lot of people will do, and let's see how good I am at using this software. Here's the NASDAQ divided by the money supply. What do you notice? This is the craziest stuff to me. What do you notice about this chart if you divide the NASDAQ by the amount of money that is currently in supply in the United States? We haven't hit a new all-time high yet. The amount of money in NASDAQ versus the amount of money that's liquid in the economy still has not hit an all-time high back from the dot-com bubble. And you're telling me that this is an even worse bubble and it's the biggest bubble we've ever seen and we're about to go into a bear market even worse and longer than the dot-com bubble? I don't think so. I don't think any of that makes sense. How could it? Because the type of mania phase that causes something like this to happen clearly has not happened here yet. It's not even close. It's like, I mean, look at the angle of this. I really like drawing, like, right? That's the angle of number one. Let's Give this a little bit. There you go. That's the angle number 2. Okay. This is the market trajectory that everybody said was going, or not everybody said. This is the market trajectory that put us in a 15-year long bear market. This is the market trajectory that we're sitting in right now in reference to the money supply. Keep that in mind. And I can draw this, but taking M2 out of the denominator too, if you want me to. But point being, like, until this, right, starts looking, oops, right, starts looking more like that, like, I'm not super concerned about it. Short term, sure, but, like, if you're here for a year and you're looking to make a quick buck and you think this, a year-long bear market's brutal, I don't know what to tell you. You might just not be cut out for this game, and that's fine. But, like, you can't tell. I don't think there's any convincing way that you can tell me that we're due for the greatest bubble pop in the history of America. Like, sure, if we go to nuclear war or something, maybe you're right. And even then, I think we probably wouldn't take 15 years to recover. Like, actually, like, I'm being serious right now. And let's take a look at the trajectory, because again, like, we're trying to contextualize, what does a blow off top look like? A long-term macro blow off top. All right, and we're going to take this trajectory, right? And again, like, this is a 5-year period that the Nasdaq looked like infinity bull run. 5 years. Like, that's pretty significant. There's the trajectory of that. There's the trajectory of this. And we're going to compare. Again, way faster run up. Way faster. So, anyways, I hope I didn't beat that dead horse too much. Yeah, no problem, Greg. And it gives me an opportunity, because I wanted to talk about the stock market here. Like, it gives me an opportunity to contextualize the fact that, like, the fear that you're feeling about the markets is so engineered. It is so engineered, it's not even funny. Like, these markets are designed to make you feel this way so that you make bad investment decisions, right? Like, that's what they're trying to do. And, like, you're supposed to feel that fear. Because the powers that be benefit from people feeling that fear, because then they sell to those powers at lower prices than maybe where they bought at, maybe just where they were originally intending to sell at, whatever. And the people that are in this for the long run and enjoy playing this game and don't feel emotional and fearful about things are the ones that will directly benefit from that fear, right? So, anyways, I'll stop beating that dead horse. The mania phase of the early 2000s and the phase that we're currently in are not comparable, and I think I just showed for 20 minutes why that's the case. And I mean, like, you can kind of see the dot-com bubble on the Dow, but it's not nearly as bad, right? And I mean, right, this would be more interesting to compare trajectories on than tech, in my opinion. But industrial stuff is a lot more boring. Even then, right? Follow that angle. Yeah, I think there's a lot of benefit to dividing assets by the money supply. Greg says, I've balanced NASDAQ with energy banks and I'm up for the year, so it takes daily attention. Nice. It's awesome. And I think NASDAQ will keep chugging. But, like, we're going to return to everybody's favorite asset real quick and just do this exact same experiment. Let's divide it by the money supply. Oh. All right, and Bitcoin looks essentially the same. Looks like the same asset, which is cool. I like it looking like the same asset, right? Because that means that you're actually investing in something rock solid if it looks the same regardless of what the monetary base has done. And obviously, I mean, it wasn't around in the early 2000s. So if it did, I mean, honestly, if Bitcoin was around during the early 2000s, it probably would have been like the worst tech bubble ever. But yeah, sorry, I'm trying to get the denominator of the money supply out of there. There we go. Cool. Cool. All right. Happy to take any more chart requests. We've been going on an hour now. So wow, that went by super quick this time, right? I mean, what did I do? Oh, super important thing that I wanted to talk about that I didn't. And we can kind of close with this. Let's take a look at the ruble. I mean, this is crazy. Like, hey guys, this new like shit coin just dropped. Super risky, super volatile. Oh wait, this is like the currency of one of the largest nations in the world. I mean, what a crazy chart. I'm gonna switch to weekly just so that we don't have to see that really ugly run up there. But I mean, the ruble went from a 50% drawdown in its value compared to other currencies. Well, in this case, compared to the US dollar, to a 90% increase. And we're almost back to where we were before. That is nuts. Why, John? Why is this happening? Well, one, I think they're able to kind of stabilize their economy after getting rug pulled by the powers that be all over the world and the geopolitical frenzy that's taken place. But I think the other interesting part is that they're backing their currency in gold now, right? They're actually denoting it in gold. Um, and a lot of people are saying like, that's a nuclear bomb for economics and blah 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 blah. Like it gives them a ton of leverage. It's going to ruin the United States dollar. And I think there's a lot of things people are failing to consider. So again, denoting things in gold. I think I actually did I touch on this earlier? I think I did. But denoting things in gold is great to an extent. That's right. I touched on this section here, but I never actually got to the point that I was trying to make. Denoting things as gold is great to an extent, but there's things that you need to keep in mind. It's the fact that, like, how is the ruble traded with other nations still? That matters, right? Like, how does denoting their currency in gold really give them that much more leverage if half of the planet is not willing to trade with them right now? Worth considering. Two, just because the United States dollar is fiat, it's also backed by the strongest economy and strongest military in the world, right? And don't get me wrong, I will be the first to dunk on the fact that the United States dollar is like essentially backed by nothing and is way too liquid for its own good, and we can just print it at will. That doesn't mean that it's like unusable, and the fact that the ruble just got backed in gold turns it to unusable or is going to debase it. So none of that's accurate, right? And also, Russia can go back to not denoting the ruble in gold anytime that it wants, literally. So with all the people that have sent me links to this, and I appreciate getting the conversation going about it. But you know, is it an economic nuclear bomb? Is the United States dollar going to be displaced by the ruble? I just don't think any of those things are going to occur. I think that it's strategically speaking, a smart move by Russia. It allows them to stabilize their currency when their economy is absolutely in the toilet right now. But I digress. I think estimates right now say they're going to see a 10% decrease in GDP this year as a result of this, which is substantial, super substantial. So, let's see what else I want to take a look at. The total crypto market cap recovering beautifully. Taking a look at the logarithmic regression bands, it is also above its 20-week moving average and 50-week moving average. Taking a look at the daily chart, getting rejected by the 200-day in the same way that Bitcoin is. Worth taking a look at. Other thing I want to take a look at is the dollar index, which is struggling. It gets really struggling as of late. And oh baby, I've been waiting for the dollar to struggle for a while, because when the dollar struggles, that means that assets run, right? What's amazing is, assets have kind of been struggling for the past year, like the stock market, Bitcoin, right? It's just kind of been in like a big accumulation range. It doesn't really look all that bullish by any stretch of the imagination. And with that, like, that's because the dollar's been in a pretty big uptrend since it bottomed out in January of 2021. And, I like using RSI, right? And I've used it a few times as an indicator. It's continued to put in higher highs with the RSI every single time that it makes a new high, with the exception of that guy right there. Could have been a fake out. But now we're starting to get some bearish divergence, right? Put in a new high right there, and the RSI is way lower from a momentum perspective. So, what I'd like to see is for this to continue to struggle and then start making its way back down. This would be bull run, right? Everybody has to keep an eye on the dollar because that could mean a bull run. So definitely be looking on the out for that, right? So to recap, stock market looks better, not out of the woods yet. Bitcoin looks better, not out of the woods yet. I personally am feeling substantially more bullish than I was 3 months ago, but again, we're not out of the woods yet. We're looking for the dollar to roll over and head into a downtrend. We're looking for the Bitcoin price to get above the 200-day moving average and above that substantial logarithmic regression band. More of the same with the stock market. So better shape than we were, a month, 2 months ago when I was like, hey, like, we're definitely in a downtrend right now, but I want to be cautious about all of it. I'm trying to see if there's anything else that I want to cover before wrapping up for the night. Please, if you have questions, this is your last opportunity to ask them. I'm just going to take us time to look at Polkadot's chart. Because, man, I like Polkadot a lot. Polkadot's obviously broken its downtrend. It's not super meaningful. Just an arbitrary line in the sand. It's got to break a downtrend. So what I'd like to see Polkadot do is get above $23, come back down, hold it as support, and then move up. And Polkadot's in the same spot as Bitcoin, where it's like right beneath. Yeah, so it's holding the 100-week as support now, or 100-day as support now, which is awesome. 200-day is still far overhead. That's going to be a challenge to pop over. Switching to the weekly. Right, still not above its 20-week, still not above its 50-week. So we want to see that. But man, like, I'm a huge fan of Polkadot as a project. I think I've talked about it on most of the streams. So we'll see what happens with all of it. Anywho, guys, I really appreciate people coming on. I just personally was really excited about the market. Tried to keep the energy up the best that I could this entire time. It's been a really long week for me, been a long day for me, but doubled up on the caffeine to see if I could go and knock this out and be halfway entertaining for the hour here. So anybody that popped in, I really appreciate it. Always appreciate you giving me some of your time to listen about the things that I have to say about economics and finance. And next week, I don't know if I'll be doing a live stream, but I do have a pre-recorded video that I will be posting covering Bitcoin and its potential to replace the US dollar, which is very, very low. And I explain all of the reasons why. As much of a Bitcoin bull as I am, the US dollar is not going to get debased as the world reserve currency anytime soon, if ever, but anytime soon. It will take, I said in the video, like a minimum of, a decade, most likely, for that to be the case. So, if such a thing were to ever occur. So that's what I'll be posting up next week. Maybe I'll try to fit a live stream in there on top of it. But until then, appreciate everybody that came on and chatted for a bit. And I hope you guys have a wonderful night and a wonderful weekend upcoming here. Made it past the halfway point. Peace.